Good day, everyone. This is Charter Training Center. We are going to continue our series on IFRS questions and answers. If today is the first time of seeing this video, then I will encourage you to go to our YouTube channel by following the link below this video. Okay, so go there and you will see all the previous videos that we have made. Alright, so having said that, let's get started for the question for today. Alright, so today we are looking at this question on the screen. Alright, so the question is on IFRS 5, non-current assets held for sale and discontinued operations. I read, in accordance with IFRS 5, non-current assets held for sale and discontinued operations, an entity shall classify a non-current asset or disposal group as held for sale if its carrying amount will be recovered principally through a sale transaction rather than through continuous use. On 1st April 2016, Gologo Limited purchased an equipment at a cost of 450,000 Ghana cedis. It is being depreciated on a straight line basis over its useful economic life of 15 years. The reporting date of Gologo Limited is 31st March. At 31st December 2020, the equipment was no longer needed by the entity. It was decided that the asset should be sold and a buyer was being sought. The asset is advertised for sale at a price of 275,000 Ghana cedis, which was a reasonable reflection of its fair value. It is anticipated that a transportation cost of 30,000 Ghana cedis will be incurred to deliver the item to the buyer. The sale is expected to occur within 1 year. Required: I. Explain the disposal group concept under IFRS 5. II. Demonstrate how to account for the above transaction on 31st March 2021 in accordance with IFRS 5. Alright, so we have the question on the screen. This is about IFRS 5 non-current assets held for sale and discontinued operations. So let's try and break the question down and then we'll solve it together. So there's a company called Gologo Limited. They bought an equipment for 450,000 and this equipment has a useful life of 15 years. Okay, and they bought this equipment on 1st April 2016. Okay, but after using it for some time, they decided that they no longer want to use it, but rather they want to dispose it either by selling it. Okay, and they advertise the equipment in the newspapers or on the media, and the price the price tag for the equipment is 275,000. Okay, and they have to incur transportation cost of 30,000, as part of the selling cost. Alright, so based on this information, we are to determine the treatment for this transaction according to IFRS 5. Okay, so let's get started. First, we need to explain the requirement. I says we should explain what disposal group is. Okay, so what is a disposal group? So a disposal group basically refers to a group of assets to be disposed of either by sale or otherwise, together with its associated liabilities. Okay, so if we have a group of assets, so in this case, let's say a cash generating unit. So the group of assets can be Can be furniture and equipment, can be building, can be vehicles, okay, coming together to form a group of assets. And when these assets are brought together to be sold in a single transaction, it is called a disposal group. Okay, so a disposal group refers to a group of assets to be disposed of through sale or otherwise in a single transaction. Right, so this is the definition of a disposal group. Alright, so we have solved the requirement I. Now let's go to requirement II. Requirement II says demonstrate how to account for the above transaction on 31st March 2021 in accordance with IFRS 5. Okay, so first we need to know the treatment of an asset that has been classified as held for sale. Okay, what is the carrying amount of an asset that is classified as held for sale? Okay, so an asset classified as held for sale is carried at its lower of its lower of its carrying amount and fair value less cost to sell. Okay, so it is the lower of its carrying amount and the fair value less cost to sell. Okay, so we need to find the carrying amount of this asset and the fair value less cost to sell. After that, then we'll take or we'll select the lower of these two. The lower of these two. Okay, so let's calculate the carrying amount. Let's calculate the carrying amount of this asset on the date that a decision was taken to sell the assets. So let's calculate the carrying amount. We know that carrying amount is equal to cost minus accumulated depreciation. Okay, so what is the cost of the asset? So the cost of the asset, we can find it in the question. Okay, the cost of the asset is 450,000. As you can see, 450,000. Now we need to calculate the accumulated depreciation from the time the asset was purchased to the time of the decision to sell the asset. So we need to find when the asset was purchased and when the asset was decided to be sold. So the asset was purchased on 1st April 2016 and the decision to sell the asset was on 31st March 2020. Okay, so the date purchase is equal to 1st April 2016. And the date of the decision to sell the assets. That one was 31st December 2020. Am I correct? Yeah, 2020. So from 1st April 2016 to 31st December 2020, how many years are in between these two dates? Okay. So have we have 5 years. All right, let's see whether let's determine the years between these two dates. So 1st April 2016 to 1st April 2017 is 1 year. 2018 is 2 years. 2019 3 years. 2020 1st April 2020 is 4 years. Okay, so that means it's 4 years and how many months? 4 years plus 8 months. 4 years and sorry, 9 months. So 4 years and 9 months. So we need to determine the accumulated depreciation for this period, 4 years and 9 months. Okay, so let's see. 9/12 give us how much? 0.75. So 4.75. Okay, so the accumulated depreciation will be over a period of 4.75 years. So let's determine the depreciation charge per year. Okay, the depreciation charge per year will be 450,000 over the useful life. Okay. We know that the useful life of this asset is 15,000. So 15 years. So it will be the depreciation charge per year. So that will give us 30. That will give us 30,000. So that means the accumulated depreciation for 4 years for 4.75 years is going to be 30,000 multiplied by 4.75 years. So that will give us how much? That will give us 142,500. 142,500. Okay, so that will be our accumulated depreciation, the period for the 4 years and 9 months. Okay, so that's the accumulated depreciation. Alright, so now we can calculate our carrying amounts. So our carrying amount is equal to the cost. Okay, it's equal to the cost, which is equal to 450,000 minus the accumulated depreciation, which we just calculated, 142,500. So 142,500. So the carrying amount will be how much? So 450,000 minus 142,500. Okay, so that will be 307,500. Okay, so there's the carrying amount at the date of the decision to sell the assets. So now let's find the fair value less cost to sell. The fair value less cost to sell. Okay, so from the question, the selling price was how much? The selling price was 275,000 and the cost to sell is 30,000. So that means 275,000 minus 30,000. 275,000 minus 30,000. So 275,000 minus 30,000 will give us how much? Give us 245,000. 245,000. Alright, so now we compare the carrying amount to the fair value less cost to sell and we'll pick the lower. So clearly the lower is the fair value less cost to sell, which is 245,000. So the carrying amount of the asset of this asset classified as held for sale will give us 245,000, which is the fair value less cost to sell. Okay, which is the fair value less cost to sell. But then we can see that the fair value less cost to sell is the carrying amount is more than the fair value less cost to sell. So it means there's an impairment. So it means we have to recognize an impairment. So the impairment is going to be the carrying amount, which is 307,500 one minus 245,000 minus 245,000. Okay, so that is the impairment. So this this the impairment is 62,500. So the impairment is what? 62,500. Right. So let's go back to the question and let's look at the requirements again. Okay, so demonstrate how to account for the above transaction on 31st March 2021 in accordance with IFRS 5. Alright, so on that date, on 31st March 2021, that date, we are going to recognize impairment of this amount, and also the the assets will be held at, or will be carried at 245,000. Will be carried at 245,000, and the assets will be reclassified from non-current assets, okay, to, in the balance sheet it will move from the non-current assets category towards current assets. Okay, the reason is that we expect to sell this asset within a year, so therefore in our balance sheet we have to move it from non-current assets to current assets. So under our current assets we will have a line item called assets held for sale, and the amount, or the carrying amount of this asset will be 245,000. Alright, so here ends our lesson for today. Thanks so much for watching, and if you have not subscribed to our YouTube channel, you can click on the link below this video and subscribe for more content like this. Thank you and see you next time. Bye.